So if somebody's watching this and says, I'm watching a famous value investor and I want to get some tips about what I should do, should you go try to look for stocks yourself? Should you give money to a money manager? Should you give it to a long-only money manager, a hedge fund money manager? And what kind of rate of return should the average person watching a show like this try to get for his or her money? Is it 6% a year should be happy with, 7%, 5%, 8%? What do you think a value investing person should feel they should get as a rate of return on a consistent basis so they can go away, take a trip around the world, and not have to worry about their money?
An investor should recognize that the biggest threat to their generating a return over time is their own behavior. And so if somebody has the mindset of when stocks go up, I get excited and want to get in. When they go down, I want to get out. That behavior penalty will swamp any other choices they make in terms of whether they picked great stocks, whether they hired a great manager, whether they invested in a great fund. So what I would say is if you are prone to these very normal behavioral biases, having a great financial advisor who can provide that sort of courage, that fortitude, and that patience, like the two lions at the public library, patience and fortitude, an advisor who can modify your behavior is one of the most important investments you make. Now, if you're wired where you don't have that investor behavior problem, then that simple systematic investing, putting something away every month, every quarter, every year, those will matter so much more than whether you selected the hot manager or the right sector. You can get in at the wrong time, but if you stay in, you can earn your way out of that. What really matters is the behavior.